Welcome back. Well, a good recovery is what you're seeing on the index itself. We're down only around 15 points odd. So that, that dip that we saw in Monday's trading session, maybe the Indian markets were prepared for a bit of a disappointment from the Fed. Well, let's turn our attention, though, to the commodity space. Manisha Gupta joins us to tell us the one commodity that she's tracking. Manisha?
Nigel, thank you for that. Well, the knee-jerk reaction and the reaction to the Powell statement has come in, and we've seen that sell-off also in the markets already. We did see 2 to 3% of a decline in the overnight markets, and while we're not out of the woods yet, it still is under the pressure, but many of these commodities now trading off its lows. So the dollar index strength is something that continues to weigh on to many of these dollar-denominated commodities. The markets also are now pricing in a 70% chance of a 50 basis point rate hike in the month of March. 3 days ago, it was a 30% of a probability of a 50 basis point, but that clearly has changed in the overnight markets there. The street is clearly reacting to the Powell statement where he said that the central bank is prepared to move faster and the interest rates could peak higher if the data warranted. The markets also are reacting to the Chinese 2023 numbers, economic growth target at the lowest in 30 years. We also have seen the Chinese import data decline by nearly 10%. So whether it was the inflation numbers or the China trade number, both of these disappointed, and that is where we saw the pressure come in from. Apart from that, it is also about the record current account deficit for the month of January in Japan. The Chinese yuan right now is trading at a multi-month lows. That also is weighing on many of these commodities, 9-week lows, by the way. So that is where the pressure is coming in from. So the crude oil prices declined by nearly 3.5% in the overnight markets. This has been the major decline in last 2 months. But as I said, 1/10 to 0.25% of an increase is how we are trading in the energy markets right now. The precious metals actually were knocked out. You saw the gold prices come down from 1860 of a high to nearly 1810 in the markets yesterday. 2% of a decline there, and the worst day in a month. Silver prices also declined quite sharply. It's trading at a 4-month lows. We've broken below $21 and $20 per ounce as well on your screens right now. In the base metal prices also, copper prices fell by nearly 2.5%, and we've seen now copper prices come off by 7% from the kind of highs that we saw in the month of January. The chart should come in on your screen on what we've done on a week-on-week basis. So as you can see, 1.5 to 5% of a decline in last 1 week for many of these metal prices coming in. But now all eyes on the U.S. non-farm payroll data, where for the month of January, we saw a number come in at 528,000. Street was anticipating 200,000. So we got a blistering number in the month of January. Now the Fed estimates are for 200,000. If you see anything higher than there, then the probability of interest rate hikes perhaps gets higher.
Okay, thanks a lot for that. So, well, everyone's expecting higher interest rates, especially after the hawkish commentary from the Fed. Thanks a lot for joining in, Manisha. Let's slip into a quick break. On the other side, it's our Women's Day special segment. Lata will get chatting with Manisha Girotra of Moelis India and Renuka Ramnath of IVCA to discuss women's participation in industries like mutual funds and the private equity and VC investment picture. Stay tuned for that.